Okay, so it was a very interesting debate. One of the most interesting things I think that we were talking about was the M&A pipeline. That there are a lot of deals coming through, but a lot of the deals are quite complicated. There are going to be minority stakes for sale. We're going to be seeing block trades. A lot of it is going to be driven by the Spanish savings banks. Could you share your thoughts on the pipeline at the moment?
I think that part of the pipeline, everything which is related to savings banks, has been there for a while, and probably we're reaching the end and where they will be obliged to offload the stakes very fast. The issue is that either you have minority stakes and you need to convince the majority owner that you are the right partner, because for a private equity house like us it's very difficult to enter without at least a normal negotiation. Then on all the, let's say, loans part, we think that the new European regulation is going to help in that sense, allowing for banks to dispose of assets at market prices, closing the gap between accounting book value and market prices. But still it's fairly complex and it's subject to a lot of uncertainty.
Okay, thanks. And could you tell us a little bit about what HIG is looking at in Spain at the moment, what your current focus is?
We are following very close all the bank restructuring. I think like many players, we have the advantage of having private equity, credit and debt funds. So we have the capability of acting in all the whole capital structure of a business. We are launching a debt fund that is going to finance Spanish companies as traditional debt. That's, I think, it's probably a contribution for Spanish companies to transform the balance sheet and be less reliant on traditional cheap bank financing and be more open to alternative capital sources.
That's very interesting. Is that aimed at family companies, industrial companies who find it difficult to raise conventional financing, for example?
In Spain, companies have relied 80% on cheap traditional bank financing, whereas in the rest of developed markets it's exactly the contrary. 80% is bonds, alternative lenders, private equity, and 20% is bank financing. So I think this is probably one of the biggest challenges of the Spanish economy, is transforming the capital structure of the businesses and be less dependent on bank financing, which, given the current situation of the bank sector, is going to be difficult to maintain.
Of course, because the banks are proving very reluctant to lend money at the moment. Although hopefully we will see the cycle beginning to turn soon.
Yes, but you know, we had more than 50 institutions 5 years ago.
Yeah.
Now we have 14,
and of those 50 institutions, how many were making decisions based on political reasoning and to support regional businesses and so forth, and,
yeah,
rather than for business reasons?
The decision-making process was not very business-driven. It was driven by other considerations. And now basically the decision-making process is extremely rational, that deleverage is a need. So good businesses will need to find other ways to finance themselves.